What's going on, everyone? It's KiMilli, still out of Atlanta, Georgia. I'll be heading back to Savannah shortly. But listen, guys, let me go ahead and start my timer. First of all, isn't this background just lovely? This reminds me of my days when I was super duper broke, and I would go to literally, y'all. I would go to hotels just to use their backgrounds in the lobby, and I'd come in with a whole bunch of stuff, and it is set up shop and shoot videos, and then leave and be like, "Thank you," and people be like, "What just happened?" It's good to actually stay in the hotel that I'm using. So anyway, I digress. Just a little bit of humor to start this broadcast. But in this broadcast, I want you to get a pad and a pen because I need you to take some notes. I need you to understand this. I'm bringing you a story straight from my pilot group, the Credit Crushers, where I share with them some information. I give them the plays. I let them run it. Why? Because my credit report is, I'm not every woman. And my credit report is not every credit report. And so I need some of the plays that I hear about to be run in other people's profiles so that I can see how they work. If I don't have a bankruptcy on my credit report, then, I can't tell you how this or that will affect a bankruptcy. But if I have somebody else who has it and tried something and it worked for them, then I can share that story with you. So the more people I help, and I have enough, so I'm not taking any volunteers right now. But the more people I help right now, the more people I can help later. Does that make sense? Of course it does. So listen, I was speaking with someone in the Credit Crushers yesterday, and she was saying, hey, listen, I had a point increase with the self-builder loan. I did a video previously about self-builder. It is a way to get a trade line. What is a trade line? A trade line is an account in your name that shows up on your credit. So self-lender, self-builder, whatever you want to call it, it is a way for you to basically I look at it like a forced savings account. You can decide what loan amount you want, and then they'll take that total loan amount, break it up into monthly payments, and go to your account and automatically withdraw those monthly payments like clockwork. And then they will therefore report positively to your credit report. This does not require you to have credit, so it's perfect for people like myself who was post-divorce with horrible credit, financially distressed a few years ago, and it's perfect for a lot of people, quite frankly. So self has helped her. It's been a few months, and she saw a point increase, but she wanted more of a point increase. So she came to me and she was like, hey Kim, I see this thing called, I think it was like Credit Strong or something, I believe. And she was like, I want to do that too. And so I said, first and foremost, let me tell you guys this. If you go and you do stuff like Experian Boost or Credit Strong, always be aware the same thing that helps you can possibly hurt you. So if you really don't know for sure that you're going to be able to meet that monthly payment for a self or a Credit Strong or something like that, don't do it, because you don't want to do something with the hopes of improving your credit and then shoot yourself in the foot. Likewise with Experian Boost, if you have your cell phone and your cable bill or whatever you can get put on Experian Boost to boost your credit score, make sure you pay them bills on time all the time. You don't want to add your cell phone bill and now your cell phone and your it boosts your score, and then you have a bad month and you pay your cell phone bill late, and now it drops your score. So just be aware of that. Every single time you add a trade line to your account, yes, you're beefing it up. Yes, you're building it out. Yes, you're giving more girth to your credit report. But there's also a higher probability for you to have a mishap and tell on yourself. All right? And it'll negatively affect you. So you want to be cognizant of that. So when I was speaking with this young lady, I told her that, listen, you already got one trade line. This is reporting as an installment loan, meaning that once you pay it off, it's done. Once you complete the terms, it's done. Versus revolving. With a credit card, you get $1,000. If you charge $100, then you pay that $100 back, and now you have $1,000 available again. It revolves. The limit revolves. The amount available for you to use revolves. Okay, like a revolving door as you pay it up and down. Versus installment. It's just one set price. You fulfill the terms. Boom, you're done. Right? So I said, you already have an installment loan. So do you want to open yourself up to another loan? She's like, well, I'm just trying to get my points up. So then I said, well, what else is on your credit score? Do you have any credit cards? She said no. So now we know we need to set her up to look attractive to banks and to lenders. All right. And so then I said, well, what about, I know she doesn't have a mortgage. Because I know her situation, right? No shade. I don't have a mortgage either. So there's no mortgage loan reporting on her credit. Now, as far as a car, I'm like, okay, your car, is that financed? And she's like, no, I paid that off years ago. So I'm like, crap. She doesn't have a car reporting on it. So she says, so I don't have anything else. Now, I know from experience working in the education system that a lot of times you got to ask people things multiple times to really get the true answer. And I also know from watching Dave Ramsey in my former life that, a lot of times people would say they didn't have debt, and then they would be like, I don't have any debt, but they were talking in terms of credit card debt. So he was like, what about a mortgage? And they were like, well, yeah, I got that, but that's not really debt. And he's like, if you own it, it is. And then he would be, what about student loans? Well, yeah, but they're in deferment, so that doesn't count. No, it does count. That is debt. So I asked this young lady the same thing. Turns out she has student loans. So I was like, okay, are they in default or deferment? She was like, one of them. So I was like, well, hold on now. We need to know that, because one of them says you're not paying, but you're in good standing. The other one says you're not paying and you're in bad standing. So as it turns out, she was this one. She wasn't paying and she was in bad standing. She was in default, not deferment. And so I was like, okay, mash the brakes. That's a huge problem. You can't put sugar on. This is a family-friendly video, so you can imagine what I said. And I didn't say that to her. That's just something that Marcus Barney says all the time, him 500. You can't put sugar on. Okay? When you are repairing your credit, guys, what I really want you to know is that you have to fix what's wrong before you add the good stuff. Fix the bad stuff before you add the good stuff. You can't get your points to increase if you have this underlying fungus, bacteria, okay, in your credit report. So if you got collections, charge-offs, things like that, don't try to go get credit lines and do all these other things and then pay on them to make them look good when this collection, this charge-off, this negative item on your credit score is just sitting there festering, like, no matter what you do, I'm still going to mess you up. Don't do that to yourself, okay? It's pointless. Fix it. Find a way, and there are many ways. I strongly encourage you to become familiar with the laws, because many of you have collections or certain things that are brought on by a third party, and they never had a contract with you, so they don't have the right to collect from you. But you don't know this because you don't know the laws. And so you really got to get, either you do it yourself, or you get with someone, or you partner with a community like I did with Recession Proof, and then they can put you on game. Because I'm gonna be honest with you, in me improving my credit, I paid some collections that now I see. I was speaking with someone at the conference this weekend. I shouldn't have paid those collections. But guess what? My sis, thank you, Tracy, she put me on game, because I can still go back and get that money that I gave to them. Because, I mean, there are some collection agencies that shouldn't even be collecting in your state. If you go to the Secretary of State, they don't even have a license to collect. They don't have the right to collect. But you know what they do? They just roll the dice, knowing that you probably won't look that up and find that out. And it's not until you call them on their stuff that they start to act right. So what is my point? Again, you can't put sugar on. You have to clean the bad stuff up, repair, and then, like, go into the great horizon, right? and start renewing stuff, okay? But when you get your credit report and you review that thing with a fine-tooth comb, clean it up first, right? Clean it up first, and then build it up correctly. All right. Now, when you are building it up correctly, because the only reason why she was so gung-ho to do this is because she wanted her credit score to increase. We fall in love with the score, right? Those 3 numbers, they seduce us. Oh, I'm in the 800 club. Oh, I want a 750. Oh, this. Let me tell you something, baby. You can have a 750, you can have an 800, you can have 1,000 if you want to. I know there's no 1,000. But you can have a high number. Your number can be high to the sky. If your income, there's certain things that you need to really sweet talk the banks into giving you anything that you want. And it's not just the credit score. That's one of 3 things that you need. You need the credit score, you need the credit mix, and you need some cash, baby. Okay? Have an 800 score, but your income is only $1,000 a month, and see what you get. See what you get. Run the play and let me know. Run the play and let me know. Have you a nice old $100 credit limit credit card. Okay? So it's not just about the number. It's about the number. It's about the credit mix. How many installment lines? How many revolving lines? How many this? How many that? Right? And are you hitting those data points? What's your utilization? What's your payment history? How many inquiries? What's the age of the file? Are you hitting those data points, right? And then the income. The income is so crucial, y'all. And it really depends on what you're trying to get as to what income you'll need. I know for me in 2019, I got my vehicle. I had the divorce in 2018. And then I got a vehicle June of 2019. My credit was still whack. It was horrible. But when I went to CarMax, I was like, Lord, please let me get a car. Lord, please let me get a car. I had walked my son back and forth to school for a year, called Uber and Lyft for simple tasks like the grocery store. I really, really needed a car. And so I was like, I don't know what these people are gonna tell me. But thank the Lord, I have a very profitable home-based business. A very profitable home-based business to the point where literally I have a lot of money coming in and out of my account, in and out. I have a lot of deposits. So when CarMax, the only financials they asked me for was my license and 3 months worth of bank statements. Baby, when they saw those bank statements, they was like, you good. Man, I lied to y'all not. I promise y'all, I lied to you not. I got that car so fast, it's taking me longer to get Popeye's chicken. Seriously. I got that car so fast, I lied to you not. When I was sitting at the table with the girl doing the documents, she was like, congratulations on your car. I was like, thank you so much. She was like, what color is it? And I was like, my cousin drove me there. So I looked at him, he looked at me, and I was like, is it gold? He was like, is it black? That's how fast. Like I saw the car, I saw it was a Honda, I knew they were good, and I was like, boop, 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 boop. Let's do this. Let's run the play. Literally, it was that fast. And then when they, cleaned up my car, washed the car, and I stepped outside, I was like, oh, it's great. This is wonderful. The girl was looking like, what the heck? But here's my point. It wasn't no problem. No money down. Now, the interest rate was reflective of what? My credit. The interest rate was indicative of that credit that I had, right? But I had to put zero down because the financials were there. I could stand on those financials. If I had that same credit score, but I didn't have the financials, guess what? I would have had a problem. Your girl still probably would have been walking. Okay? So, depending on what the trade line is, what the home mortgage lender underwriters, they work differently than finance guys at the auto dealerships. Credit cards look for different things than the auto guys. Auto guys look for different things than credit cards. So it really just depends on what your goals are and what you are trying to do. But I tell you what, no matter what, you're going to need 3 things to get what you really want. You're going to need the credit score, the credit mix, and you're going to need the cash. You can have an 800 credit score, but you're not getting that $400,000 house unless you have the proper credit mix and the cash, the money to support that you have the capacity to support a monthly mortgage payment for that amount. Okay? So this is super important because I see people make this mistake all of the time. If you're just cleaning your credit in general, it's fine, but kind of have an idea in your mind. If you know you need stuff, you don't have a car in your name, it's time for a new car, you don't have a house, you don't have any credit at all, kind of get an idea. What order do I want to do these things in? What is the order of importance to me? Because that's really going to play a large part in what you do and what you add to your credit and the time and fashion that you do that. You just don't want to just throw things on there and be like, as long as I pay it, I should be fine. As long as I pay it on time, I should be fine. No, your credit profile is so much more complex than that. And it becomes more simple as you understand it and dialogue about it more. But initially, that myth of just, the 800 credit score. No, you need more, baby. You need more. You can't put sugar on. Okay, clean up all that bad stuff. before you try to add good stuff, and start to really look at your life and come up with a well-rounded plan to increase your income, build out your portfolio, and that will get the score up. A lot of people try to get the score up first. No, do all this other crap first, and the score goes up by default. Does this make sense? Yes, it does. Of course it does. If it didn't to you, then watch again, friend, because it made sense, all right? All right, so guys, listen. That's it for this broadcast. I hope you found it helpful. Did you already know this? Let me know in the comments down below. If you want to talk with me more about anything that I just discussed, I am available. I book consultations. I have one today, actually, 30-minute consultations and 60-minute consultations. I'll put my rates down below. If you think this is something you want to do, I strongly advise you to take advantage ASAP, because each day that passes, your girl is investing in herself, and as this brain of mine gets more beautiful, my rates go up. So thank y'all for watching. I'll talk to y'all later. I gotta go pack up and finally get out of this hotel. I know they like, is this heifer trying to live here? Pretty much I was. But anyway, I'm gonna go. I'll talk to y'all later. Bye.